Well, welcome back to Finance Uncut. On this episode, we've got breaking news regarding the SLV Silver Trust, the LBMA, and guess what, folks? They don't have enough silver. And coming in from Zero Hedge, silver squeeze hits London as SLV warns of limited available supply. Now, in this article from Zero Hedge, I will put a link in the description below. You can read the full article, but I just want to go through some of the highlights. So the silver-backed ETF, which claims to hold their silver in London, now account for 85% of all the silver claimed to be stored in the London LBMA vaults. So that's over 28,000 tonnes of the LBMA's total of 33,609 tonnes. This, for anyone who can out two and two together, does not leave very much available silver in London for silver ETFs or for anyone else, especially the largest silver ETF in the market, the giant iShares Silver Trust, or SLV, which, let's not forget, has the infamous JP Morgan as custodian. That SLV has seen massive dollar inflows in late January and early February, with corresponding jumps in claimed silver holdings, is now widely known, but is worth repeating here for what's about to come next. Now, they changed their prospectus because basically they don't have enough silver to meet the demand of shares in that ETF. So it goes on, it says, it is possible that authorized participants may be unable to acquire sufficient silver that is acceptable for delivery to the trust for the issuance of new baskets due to a limited then available supply, coupled with a surge in demand for the shares. In such circumstances, a trust may suspend or restrict the issuance of baskets. Such occurrence may lead to further volatility in share price and deviations, which may be significant in the market price of shares relative to the NAV. So basically, they have defaulted. In a way, they have defaulted. So they cannot get the demand, get the silver that the new shares have, people piling into the ETF. They don't have the silver to back that up. And so now they are warning that they may suspend or restrict. Basically, they're changing the rules. So now, I'm not going to read all this. You can read the article in your own time, but just down the bottom, I just want to read that last paragraph. Humorously, the third new paragraph inserted into the SLV prospectus explains that silver price, which, don't forget, is a paper price set by the dominance of bullion bank trading on COMEX and LBMA London, is subject to extreme fluctuations which are unrelated to physical silver demand and supply. But alas, there is no mention of the years-long silver price manipulations that JP Morgan and other LBMA cronies have been recently prosecuted for. If the short squeeze on GameStop caused fireworks among a few hedge funds on Wall Street, we hate to think what a short squeeze on the global silver supply will look like as hedge funds wake up to the possibility that SLV cannot acquire sufficient silver acceptable for delivery to the trust. And that's where we are, folks. That's where we are. So congratulations, everyone who has been piling into silver, piling into the silver ETFs. You have disclosed to the world the shenanigans and the lies. Jason Burak from Wall Street for Main Street calls this period that we're in and the period that we're going in and continuing to move forward in is stagflate, tax, and lie. And I think he's got his little meme right on song for where we are. Coming in from Seeking Alpha, silver shortages suggests we're only months away from $50 silver. Now, I've said in previous videos that I expected the price of silver. My target for the end of the year was $50 silver to reach its all-time high. However, with everything that's going on, the supply and demand issues that we're seeing, they're real. I will not be surprised if this actually comes true, that we do hit silver's all-time high a lot sooner than I had predicted As I said, I thought it'd be the end of 2021 that we would be somewhere around the all-time high. Now, I would not be surprised if this is right. So once again, I won't read the full article. I'll put a link in the description, but just some of the summary highlights from this. Premiums on physical silver coins are at records and shortages are widespread internationally. This is only possible if silver futures are not priced for a sudden flood of monetary demand. Monetary demand tends to feed on itself. As the higher the price goes for a monetary asset like silver, the higher the demand for it goes, risking a dollar run. Monetary demand for silver suddenly woke up in early February, causing shortages, rare backwardation in silver that we last saw in March 2020, September 2015, and February 2011. After each of those backwardation periods, the paper price of silver skyrocketed within months as arbitrages moved in to bridge the physical paper gap. This backwardation is most similar to February 2011, with silver nowhere near lows. And if history rhymes, it suggests we are only months away from $50 silver. Yeah, I hope that's fantastic. Now, I'm still buying. I bought some silver, some physical silver a couple of weeks ago. An Australian dollar. I bought them for 38. I bought some 1 ounce coins for $38 a piece. They're now about $45, $46 a piece if you want to get those. But I've also been piling into the silver mining space. So we know about the benefits and uses of silver, the demand for silver, especially as we electrify the economy. I just heard this morning that it's estimated that Tesla, for one of their vehicles, requires about 2 ounces of silver for each vehicle, and I think it was up to 100 kilos of copper. But with solar panels, electric vehicles, I think it was it Jaguar? Someone can fact check me on this. I think it was Jaguar came out last night and said by 2025 they are only making electric vehicles. So yeah, so it's going to be a lot more demand for silver, and at the same time, silver supply or production peaked in 2016 and goes down from here on out. So you can see from this graph that silver peaked in 2016. So while demand for silver goes up, we're seeing production or supply go down. It's really economics 101, folks. It's really economics 101. And even the silver secondary supply peaked back in 2012, and it goes down because a lot of the silver doesn't get recycled. The price of silver where it's at, it's not worth the recycling. So once again, world silver extraction is expected to go down here on out. So we've reached peak supply. That was in 2016. And we go down from here. Yet from an industrial use, the demand continues to go up. So, you know, obviously we're going to see the price go up a lot higher in the years and years ahead. One of the reasons why I like silver miners and gold miners as well is their balance sheet. Generally, most of the miners have excellent balance sheets, very little debt on their balance sheet. So from a risk point of view, you know, they're very, very solid. The other reason why I like investing in this space, if you go back and have a look at the bull market for silver from May 2003 to March 2008, you can see the silver price in black there went up 332%. But if you get the right miners, you can see that some of the returns there are 2,500%. So you get that extra leverage on the underlying price of silver. And if you have a look at the bull market in November 08 to April 2011, once again, the silver price there went up 398%. But once again, if you bought the right miners, you know, you could be looking at, you know, over 1,000% return. So There we go, guys. You guys have been fantastic. You're jumping into silver. You're buying silver. You're exposing the lies in the LBMA and the SLV ETFs. And we're going to see this thing break. I have no doubts. And it's just economics 101. When you've got less supply and more demand, the price follows. So be patient. Yes, $50 silver could happen a lot sooner than I predicted, but I'm in this game for the long run. I see more and more demand throughout this decade. So for me, it's when the market pulls back. I'm going to do a video tomorrow how I'm taking a little bit of risk off the table. I see some risks in the stock market, and I'm going to do a video on that tomorrow, so stay tuned for that one. However, the price of silver and gold may pull back if things like the stock market happen and there's liquidity issues and people need to sell assets to cover margins and whatever. And we'll go into that in the video tomorrow. But for me, that is an opportunity to buy because we know what the demand, the fundamental economics of silver in particular, but also other commodities are going to be in the decade ahead. So thanks everyone. I hope you enjoyed this video. Hit the like button. If you haven't subscribed, do so. Really appreciate it. Want to see all your thoughts and opinions in the comments below. And I'll see you again on another episode of Finance Uncut.